Everyone, welcome to Top Trading Edge. And today we're going to take a look at the market. We're going to deep dive it into the market and try to find all the answer. People have the questions. We're going to deep dive in towards the fundamental. As I always mention about the three things, we only try to analyze fundamentally as well as technical analysis as well as geopolitical. That would help us to land somewhere close to where we need to find the navigation. So many people are asking the questions about like when do you think market will come back to its high or it's gonna go low. Many people have the same questions, right? So we try to find that option, the answer. So somebody was asking me what is the bottom of 2022 or is gonna go higher. Many people are very bullish right now, say hey, and now is reversal is gonna go back to the high. Nobody knows, just to let you know, nobody knows. Anybody can do any, people who have bullish, they are bullish, they will be carrying hopes. The people who are bearish and they're afraid, they will say it's going to go down. But that's not the right way to analyze. That's what I'm trying to teach you in this video, that you can't, incomplete knowledge is not a good knowledge. You can lose in that. So we need to, in this video we're going to deep dive into three things, as I said, that will answer that how far this market can go, how far it can go, because everybody has their own different stocks, and your stocks are depends on this market. If the SPY goes up, your stock goes up too. When the SPY goes down, your stock goes down, most likely. Those are the scenario, right? So let's deep dive in this video and see what happens, what are the you know outcome is. All right, so before we start, this video is for education purpose only. I do not sell any financial advice or recommendation to buy or sell any sort of stocks or an investment. For your financial action, please consult with your professional financial advice before making any financial decision. All right, so let's take a look. We start with the chart first, technical things, so at least we get to know basic things. So right now, currently, what is happening in the market, which I always every day tweet about market SPY. So we're gonna look at the SPYs, S&P 500, which has the most hype, most weightage in the market, which is top 500 Fortune company listed in the S&P 500. So that is a major index we follow, and that will give us the major outcome. All right. So let's start with the 30-minute chart. So right now, the chart we have is 30 minutes. So each candle represents 30 minutes, which is gonna give us the little idea about currently what is happening after it bottom out at SPY was 480 and it touched down to 420. And since then, as you can see, is grinding little bit higher, grinding higher, right? As you can see that. So it was grinding. So, but I created the upward channel. As you can see, the channel I created is upward, but every time you see it trying to test resistance, come back, test the resistance, come back. So these are the scenario right now market maker is doing since how long? So 1, 2, 3, 4, 5, 6, 7, almost like 5-6 days. This is 30 minutes. Yeah, about 5-6 days, right? Is happening now. So basically, I call it a bear flag. I did say that when we were right here somewhere. I see this is trying to be a bear flag, but we need to see how far it goes and try to break this, and it looked like, but then it was a bear trap, and then again it went up, and then again tested yesterday at the floor, and then tried to go up, but then we found the resistance, got rejected from this resistance, and we were pretty much doji candle. Where were we? That's where we left. So it looks like a bear flag. If bear flag can break upwards and it can break downwards, both way it can go, but most likely bear flag is downward. That's why, but market can trick you and it can take upward because they created the bear flag, right? And our channel is upward, so that's how the bear flags are made, right? Upward channel can be a bear flag, and that can happen, but too early to decide. Let's not pattern can be broken and it go in a different direction to trick the people. So let's not just follow pattern. We're gonna look at the further analysis also in this chart. So Right now we are right here for 48, and we want to make sure that we don't break this 444, 445, 445, 444 is not a good sign. We don't want to test this support 444 basically. So next week when we check market, we don't want to break 444 now, because diagonally we are going upward, right? So that's why it over here support was 430, over here support was 444 now, because we are grinding higher in this channel. So let's see what happens next week. But now I'm going to cancel all this and we're going to go to the daily chart, because this is 30-minute chart, so it's give you at least some the closer look. You want to go to the closer time frame. That's why I was trying to show you there. But I'm going to now cancel this, cancel this, cancel that, and let's go to daily chart. I'm sorry, let me cancel all other stuff too, so at least we come to know, so I don't have this pattern later on in the middle. Cancel this, cancel that. Okay, let's see now whatever left we see. Let's go to daily. Okay, so this is the daily chart, and let me cancel the pattern. Okay, you know what, let me bring that cam. So now you see that that's the bear flag basically. So this is how the bear flags downward. Yeah, right, you can see that that's the bear flag. So now let's analyze daily candle, because each candle represents the one day of the work. So once we bottom out, and whenever you see, hold on, let me bring it a few things, so at least you can understand very important part. You see the full candle, full green, that means lot of buyer power. Whenever you see the hammer, like green hammer, second bullish candle, because this is also bullish hammer, so more prominent, slightly less prominent than normal bullish. This one is normal bullish, and this is doji, we call doji natural, right? And this is least, because lot of seller came and sold it. That's why. And this is doji, because undecided, do not know the future direction. That's why we call doji. And this is normal bullish, because it has a wick on the head as well as wick on the bottom. So this is good bullish, but wick on the head is not good, because there's a lot of seller came in, and that's why the candle dipped down little bit. Same thing. Keep in mind, bearish. Bearish means full red is bearish, and then buyer comes in and buys it. So that's why the uh, opposite of the bullish become bearish. So this is bearish hammer, just opposite, because going down, right? So more power, less power. And then this one had the same thing, the little wick on the top and bottom. So it's slightly less power than this one. And this is called doji. This is the least one, because a lot of buyer came here, lot of buyer came and remove the more red out of it and become less red, right? So this is how now you remember. Okay, so let's go back to, okay, let me remove this. Okay, so now if you take a look at it here, we bounce inside, and then we created the channel from here, and we try to broke the 200-day moving average. Then we cross. Now here, take a look at it, there is no wick here, full nice candle from the top. Now second one was also super, all the buyer lined up, because they thought this is the consolidated area right here, from 410.20, then we 440 area was approved. These 200-day moving average resistance was approved by 3-4 days, because you're trying to break, trying to break, trying to break, trying to break. We broke here, we broke here also, over here rejected. But then this time we broke, but then seller came. Now, but this time we broke through, and it was close above 200-day moving average. So that was the bullish sign. And I always tweet that time also, and you guys can see. So that means look at the next day, because buyer got a confirmation that, hey, this 200 line is accepted, and it closed about 200 day, and then it went up, right? Well, this video going to be a little big, but a little longer, but I just, have to explain you so you understand next time whenever I make the video. And then next day, as you can see that the candle is smaller, getting smaller, right? But it is a bullish candle, but the buyers are not lining. Buyers are afraid because of 100-day moving average right here. Then next day we cross 100-day moving average and become doji because flag resistance. And I did tweet that there is a resistance here. We got to be very careful. Though everybody was celebrating because we grinding higher high, right? That's people are happy. But then next day we broke the 100-day moving average and we broke down all the way to 4 445, from 460 to 445. So that is not a good sign because a lot of seller came in, right? And then yesterday, Friday, look at that. Whenever you see a wick on a head, which is not good because we were bullish, and then look at this part, seller came in and created a wick on a head, and we test the floor. You can see that we tested the floor. We got rejected at this small resistance right here. But again, this could be just a market maker. They are just right now, trying to grind. Now, what do you think? How is gonna play here? So, well, there are two things can happen based on the market condition. We need to go back to the fundamentals. But before we go to the fundamental, I think I need to go and talk about geopolitical because of Federal Reserve policies are changing, as they also discussed that we are going to tighten the interest rate. They're going to increase the interest rate and tighten the tapering, and they're going to also reduce the assets. So in now in that cases, what would happen? People have question of what are the scenario would be in that cases. And so if you know, guys, what happened, right? This one, US economy added a greater than forecast 470,000 jobs on this Friday. We had a news, right? So this is a very good news. 470,000 job added in January. Right? So, well, the good news is bad news now. That's now what are you going to say? Good news is a bad news because if you look at it, sorry, the good news now, when you see job numbers are good, in that cases the seal they have to what you call it, the higher inflation. Now we have the higher inflation to reduce the balance sheet. They have to tighten the tapering. When they tighten the tapering, they have no choice but to increase the rate, maybe 0.5% because they think, oh, jobs are gaining the ground. So they have the green signal light to go and increase the interest rate to maybe 0.5%. If that happens, then what? Then market not gonna like that. So, I mean, though they sound like a dovish to me on a Fed, but like I said, it was not dovish. It was hawkish because they got a green signal from the job data. So I also created the map here. As you can see, this is labor force participation. So if you take a look at it in 2020, we had the labor force was right here, 62 point, right, sorry, we were at 63 million for 63.4 million job data at that time. Right now we are at 62 point. So we are almost 1.2 million people not back in the job since before pandemic time, right? So we need that gap need to be filled at least for the job. So let's go back to here now. I'm sorry, we got to talk about this because oh, sorry. So if you take a look at it here, I created this so at least you guys can see what I was talking about. Now 50-year inflation rate is right here. Interest rate and inflation rate is here. So it's a big, huge gap if you compare with the last 50 years. So we need to this widen gap. We have to fill this gap in order we have to have a less gap to make the healthy economy. So that's what Fed has to do that, and we have inflated the balloon. As you can, that's why I made this also that we have inflated because of the tapering easy and lowering the interest rate to 0%, right? So that we all know now. So I don't want to drag too much into it because I have other data to show you. So those are the geopolitical things can happen. And one thing you have to remember this, that If you see this $10 trillion we have pumped into the economy, Fed has printed and bought all the bonds and corporate bond, municipal bonds, um, treasury bonds. So they have put print $10 trillion into the market, and that's how we have the currently economy going on. That's called artificial economy. That's why I showed you the balloon. Now we need to get rid of. We need to now. Fed will come, and after the increasing the rate, they will come and uh, they have to reduce their balance sheet. Now those balance sheets are there basically, all the bonds, corporate bond, municipal bonds, and all these they have to buy back. So they have to print more money, and uh, they have to they have to reduce their balance sheet. So they have to sell it basically. Once they sell those, who gonna buy those junk one? Most of them would be the junk one. Nobody gonna buy that. So that will have a more issue, and maybe Fed has to again print those, and they have to they have to nullify those one after printing the money. That could be another major disaster can be, but we don't want to go in too much into here. So let's go back to what would normally happen. Particularly, I'm interested more into here that is going to go upward or downward, right? So we will find out similar scenario. It happened in 2018 when right here 2018 Fed chair saying Jerome Powell, and he increased interest rate 4 times. As you can see, it was 1.75. Right now we have a zero, so he had a green light to go for it because zero is we are just like in Europe and Japan. So that time we had at least 1.75. Right now we have a zero, so he can probably go half a percent interest rate also. But market is expecting because he said quarter. It could be because he doesn't want to lock himself. So he just think it could be a quarter. It could be half. He doesn't know right now until after he see all the data. So in 2018, as you can see, March 1.7% interest rate, then June 2%, September 2.25. So quarter he increased, right? So we're gonna go back and look at the data because that data wouldn't lie exactly what happened same time. Remember that time they did not have a 0%. They had interest rate already 1.5. So let's go back and analyze it. So where are we now? This one is 18. Look at the bottom right here where the dates are. Okay. So let's go closer at that particular time, particular date. I already draw here. And I wanted to see what exactly happening. That particular day when they announced FOMC meeting, they announced. But before that, already market react. So just to let you know. So as you can see here, I draw which was this line right here. So 21st March, it it dropped from here to here. Let me go and pull this. You see this? It dropped 6.7% SPY at that time. 6.7% from this point to this point, but market already knew that is going to happen because they must have said that. So market total drop almost 8.8%, 9% from here to here because market anticipate. So almost 8.8%. That time quarter percent interest rate raise, market drop 8.8%. Just like we had 8.8% drop other day when we had the 80% drop. Then that time we had, I guess I remember I had that, and we all were worried about what's gonna happen. And I got a picture, so I created this so you know. So these are the top 10 drops in a 1 month. Remember, this is monthly chart. So from in last 10 years, so 2012, 13, 14, 15, 2022, we are here. So when this happened, which is 8 point, almost 10% we dropped from here. Everybody was thinking, oh, what happened? Earthquake came. So, and I made a little video also. I made a little bit video also. It's not earthquake, man. It's still long way to go. The way I see that. So anyway, so this is 8.8% drop, right? Remember that time. So now let's go back to same place and analyze it here. So this was drop 8.8%, and then Second time, they increased the rate in June probably, right? So June, they announced on 20, 18th, 18th June. So let's take a look at the 18th June, 14th June, sorry. 14 is right here. So I made a wrong mistake here, 14th June. So 14th, next one right here. So 14th June, and to the bottom we catch right here, we drop 4%. After they announced, we drop again 4%, and then again started grinding higher, right? Remember, it goes high, excuse me, right? Then this one is 27 September. Again 27 September, 2.25. 27 September, 2.25, and I made, we dropped 11%, 10.87% right here. You see that? 11% we dropped from there to that time, September. So we grind higher and we drop again lower right here. Then December, again December 28th, quarter percent interest rate increase. December 28th. December was here. December 18, and we dropped another 10% right here. But market already reacted constant. 2 weeks market drop right here, 2 week constant, because market knew that this is going to be a last interest rate increase. So market always react early, and this time the market dropped 16%, guys. 16% market was drop at that time. So if you count from September until December, market was selling off. And look at those days, 2018 time. And this time, 4 time increased interest rate now. So if you take a look at it, we were thinking here, people, this is 8%, and then it went to right here, but it grind higher, it grind lower. Then over here, September, October, November, December, 4 months. So there will be nothing new going to happen. So same thing, pretty much market would go. Market does not go straight. Market does not go straight down. Market will go zigzag, just like our hard pulses. So similar situation will happen. Might not be the same trend. Could be a diff, higher high, higher low, lower high, then lower low. This was higher high, but then this was lower low, right? But so we have to understand that this would, according to me, it will not happen like this, because this is higher high, higher low, higher high. So let me cancel this so you can see that what I mean. So we were grind upward channel, right? We were grinding higher high, higher low, higher high, higher low. So we are upward. But from here, higher low, then lower high, then again higher high, lower high, and then we went all the way to lower low. See that? So that was a crazy drop here, and this one we discussed already. If you count from here to here, how much it dropped from top to September to December, market total drop. Too many things here. So from here to here, 18 September to December, we dropped 20%. I did made one video in that, and I described that to 20% we dropped at that time, September. So this 3 month process, we dropped 20%. So let's go here, let's go back. Now, this is how I analyze. I'll just give you an idea. From here, This is 2016, sorry, 2002, 16, 17, 18, 2 years, 17 August, 17 August, so on this one right here, 17 January, and this was December. So I need 16 December. Right here, bottom, I'm looking right here. So we gain from here, how much market gain from here to here, that's what I need to see. You see this? Market gain from here to here, total 29%. From in 2 years, grinding higher, we gain 30% we gain. Now same gain, how much we had a gain from here to here, and market drop bottom to top, 2 years, we gain 125%. So how much? 100% more gain we have. So we inflated this economy higher, way higher, because of $10 trillion we put it into the economy where everybody was locked down. And that's why you see a big elephant in a small rooms, such as Apple, $3 trillion, now Tesla, Microsoft. Everybody now become trillions of dollar company. Earlier they were not. Now they are all $1 trillion company. They have the highest weightage. Only if you take a look at the five company, they are almost 25% weightage of the whole our stock market is 20 to 25%. Only five companies, 5 to 6 company. Let's take a look at this one. You know how much Facebook dropped just now? Right from here, 330 to this one. You know what? Let's take a look at the market cap. I'm going to show you something interesting. Let me add one. So you see this drop. This is the market drop from almost 900 billion market cap, and now 640, almost 235, 240 billion they lost in one day. 240 billion. What is the Lucid market cap? You know that? It's only 30 billion, I would say. Lucid market cap. 47 billion Lucid market cap. So they you can imagine, man, it's like a five time value lost in one day, one day. So why this happened? Do you think it's just like it was one company happened? No, many company. Hold on. Netflix, mega cap, right? It's not only, we are not talking cyclical, we are talking a big company. Cyclical stock already gone into the drain. Over here, same thing. Look at this market cap loss, 270 to bottom, 160, $100 billion wiped out. If you look at from the top, from 300 billion to 150. So they lost half of his market cap, 150 billion they lost. So anyway, we don't want to go into much depth, but I just want to show you that this air is getting out of the balloon, and that's normally supposed to happen. They're not going to come and tell you that we are doing this, but they're going to slowly start doing that. So let's go back to SPY. So same thing here would can happen. We can go higher than the pattern. It will probably play the same pattern, and I can show you what are the patterns I see here. So in this case, look, higher high, higher low, higher high, now lower high, lower low, lower high. So these kind of W pattern, and then got rejected from 100-day moving average and then drop down like this, right? Similar kind of here also, you can see grinding higher, and then we fell down here. So most likely what I see here, if anybody is expecting that this market gonna go back to here, then welcome to La La Land. And I don't want to live in a La La Land, because that land will not land anywhere based on past history, because those are really fundamental data I'm looking. History always repeats. This chart look like same to me. Only thing is we have to just understand the geopolitical fundamental data and technical analysis. Based on that, I can see. But again, we always analyze every day, every candle, and see how it's performing. We cannot be bullish or we cannot be bearish based on the current scenario, but we have to keep everything in mind. How wherever the market makers, the wherever the federal is taking the market, that's what we want to go. Based on all analysis, I can see market will grind lower, and I showed you the past. That's what normally market does. Market does not go like this until unless pandemic comes and drops like this, right? This was a big drop. So we don't have a pandemic right now. So market is Fed, they wants to walk. They don't want to go and collapse the market because that will be a domino effect. So they're gonna go slowly, slowly, and they make higher low, lower high, then again lower low, then again lower high, right? And then lower low. This process would be few months. That's what I can see. Now remember how, because this red candle was rejected, these candles was bigger bullish candle and then become smaller when buyers are afraid here. You see these small candles are, buyers are afraid. Then boom, 100-day moving average sold off because nobody wants to stay above 100-day moving average. That means buyers don't like it. If somebody break and then try to be more bullish, then is a different story. But we want to see that. People wants to see this kind of candle here above this. So that is a bullish sign and it can go. And then we can test this resistance. I draw this, but we can be early. We want to watch. So anyway, so this is what I can see right now in a long run. This is how it can unfold. So history might repeat. It could be a different pattern, but this is what I can see right now because $10 trillion is being pumped into the market, and that $10 trillion will come out because that's how, when you inflate and you, how do you deflate? You have to create the demand less, right? And that's the only way they can control the supply. And I remember that picture, I did that. In fact, you recall this? This this is the Federal, and this is the, they are balancing on a wheel. This is the inflation is 7% and deflation is -7. We have to balance somewhere 2%. That's what we need to do right here. We had a unemployment 3.9, inflation was 2.4 in 2018 at the time when market was dropping, right? And GDP was 29%. So those are the actually number we need to have in order to have a little healthy economy. It can be zero everything, but we have to balance it out. So based on that, I can see there's a lot of air in the balloon, and for that reason, I'm trying to show you that we have to. One more thing I'll show you, and then we can close it off. All right, you see this right here. Tesla was a $65 at the time when the pandemic was with the split price, and then it went to 1800%. NIO went to $2 to $68, 3000% up and 99. So I keep bringing these, that these are the inflated stock. Just like that, there are many, but I just thought these are the big name which everybody believes and trust those company. I'm not talking those Russell 2000 stocks or any other stocks, cyclical stocks. So now look at the docu drop $100 from his high price. Then again, Netflix drop $100. Then PayPal. Then Twitter. Now I got to bring this Facebook here also. So these are the, after the Fed raise, fear comes. Many stock will come down here. So those who have a forward P ratio high, they will come here. Watch. Remember, I made a video on Square also. That might come here too. Just remember this air need to come out of the balloon, and how long will take, I don't know, but it's slowly. It's not going to happen overnight, but just we can. I'm not going to be immediately bullish. I will always check wherever the market is taking. I will follow my pattern every day, and I always tweet at if you want to follow me on Twitter at toptradingedge.com, and I always answer the questions there. Or you can follow me on YouTube. You can comment below. I definitely respond you back. And I really, guys, if you like my content, please subscribe, like, and press the bell button so you can get my notification. And I definitely need your help, guys. Is in a couple of weeks I started the channel, so I need to reach to the more audience. I would highly appreciate your help. uh, all right, until then, thank you very much. Good night. Bye.